Morning, everybody. Welcome to the Moving Markets podcast. It is Tuesday, May the 6th, 2025. U.S. stock market has been open for just about 30 minutes right now. I'm not going to say it's a bloodbath by any stretch, but definitely a sell-off happening so far this morning. Definitely some profit taking. And I'm going to basically call it just that. It's profit taking. I don't think the Dow being down 1%, you can see the numbers here, the Dow being down 1%, the S&P being down 1%, the NASDAQ down 1% and a third, almost 1.5%. I'm not really worked up about any of this. I'm not overly concerned with it. We've had, everything went a little bit negative yesterday. We're having a little bit more of that today. And, the Fed's going to make an announcement tomorrow. I think this is kind of from my perspective, I think this is kind of a normal thing that the Fed would be the cause for some concern and the cause for a little bit of repositioning and people being a little bit nervous, because I don't think there's any expectation at all, like none at all, that the Fed is going to do anything with rates. I think it will be really shocked. Look, everybody is going to be incredibly shocked if what we see here on this Fed Watch tool proves to be wrong and there is a rate cut or a rate increase. We're going to be absolutely stunned. This is wrong on occasions, but rarely is it wrong when it's leaning that far, 98.2% in one direction or the other in favor of a rate cut or a rate hike or even staying the same as it is right now. So I think what everybody is nervous about and what the anticipation is what is Jerome Powell going to say tomorrow? And I think that genuinely does have some people nervous. And I think that's a part of what you're seeing in today's market is just that nervousness about how far into his mouth is Jerome Powell going to stick his foot? How political is he going to make things? And what is it going to do to the market for the rest of the week? I think that's the big concern. And then, you've got headlines like this one: wobbling economy will push the Fed to cut interest rates later this year. Again, I think this is the expectation and has been for a while that we will get rate cuts, that they're going to come, maybe as early as next month. I think as of right now, still you've got, no, this has actually changed now. And now June is saying now that there's a greater chance that rates will stay at the current mark. And you've got to go now to the end of July Fed meeting before you start to see a shift in sentiment to where there's a greater, the odds are greater that the Fed will do a rate cut versus a rate increase. So that's where things are at right now. And that's what the sell-off in this market is right now as we speak. So again, I think it's nothing to get overly concerned with, but definitely something we have to keep an eye on and be a little bit cautious on. So that's what's going on today, and that's what's going on today, and that's what we have to just keep a close eye on. So let me talk first about the new trade that we put on. Let's shift away from what the markets are doing right now. I filled on this morning almost instantly. I do not have my fill prices in place yet. I can maybe put those in really quickly because I've got them right here. So I got my long call filled at 12.30. This was my actual fill price. I got my short call filled at 150. Whoops, I did those. Did I do those exactly wrong? No, but I have them in the wrong spot here. This is the buy and should be a different color. Sorry to do this while I'm online with you. I'll come back and do this later, but let's see. I got filled on my long put. My fill price was 550. And my short put filled at 142. There you go. So I'm up $3 on two contracts of this one. I'm up a whole $3 right now, but I got filled on the AMD trade. AMD reports tonight after the market, and this is so close to where it was when I got in. You should be able to get in because I actually got in 14.88, well below the $15 mid price that I was targeting. So a good fill price on this one. I'm excited for this trade, and there'll be a lot more to talk about on this one tomorrow after the report tonight and after we see what they do post market. All of our talk really should be about Palantir. These numbers are accurate and current on Palantir. You can see that our long puts that are at that 115 strike price are going up in value. Only up a little bit from where we bought them, but up a lot from where they were at the close of the day yesterday. Of course, we're losing money in the call, but our put side of the trade is going to protect us really nicely, and it's great that we're out there in the 5/16 expiration. I'm stumped by Palantir as far as why it's trading down. The only explanation anyone has given on why Palantir is down like this, because they beat their I think they met their earnings per share and they beat their revenue, and they upped their full year guidance. I mean, there was nothing negative about that report. Palantir should be trading to the upside. The problem is I think this is absolute BS right here. Analysts raise international growth concerns. That's analysts with their heads. I'm just going to say it how I believe it is. That this is going to sound a little bit harsh, but I'm just going to tell you my thoughts on that. That's a bunch of analysts that don't know what the crap they're doing and have no reason to be downgrading the stock, no reason to sell the stock, except that it has become overvalued. Palantir had a huge run up. They got back up to their all-time highs just ahead of this earnings. They are a very, in some people's opinion, a very overvalued stock. And this is a function of profit taking. This has nothing to do, this move today has nothing to do with any analyst who thinks that Palantir might have concerns with international growth. That's a bunch of crap. That's analysts trying to cover their butts because they honestly don't have a good reason to be selling the stock, except for it got a little overvalued. This is profit taking. I think you'll either get a firm bounce off the 20-day moving average, or I know for a fact that the 50-day moving average is right down here around 97.50. You may get a tumble all the way down to 97.50. I kind of don't think it'll go down that far. I'm not naive enough to think it could not happen. So we just have to wait and see and watch, but we're protected for the next couple of weeks for whatever happens. So even though the trade has given back, I mean, I think this was at 8,800 yesterday. Now it's at 79. Even though that's the case, I'm not worried about it. But that's the whole reason we got that protection. Our 95 strike short put is below where I think that strongest level of support is going to the downside. I do not think Palantir will drop below 100 or 97.50 at the very lowest, but I'm not even sure they'll get all the way down there. So I'm okay with what Palantir is doing. We're going to take some of the profit from these long puts when we cash them out. I'm inclined to take some of the profit from the long puts and pump that into some additional ownership, like maybe increase the number of contracts I have on the short or on the long calls, or do something to add to the position. So I'm good with where Palantir is at. Everything getting dragged down a little bit today. So you've also got Nvidia down. They're down a couple bucks. We've got our new trade. No adjustments to collar trades today. I know a number of these have long puts that expire at the end of next week. So we'll be active in the next couple of days, and in the early part of next week, we'll be active with some of these adjustments, but nothing to adjust right now today. Nothing to adjust on the spread trade side. Let me speak for a moment to the people that are following the triple play trades. We have and this actually pertains to the spread trade too on Johnson & Johnson. I of course hate what Johnson & Johnson is doing. They're down a little bit more today, but relative to what some other stocks are doing, they're not down too bad. We're still in the money on our long call. I still think Johnson & Johnson is going to jump up to 157.50 soon. The question is, like it's been for the last several days, the last week, will it do it soon enough? We will probably probably end up rolling this trade out one more time or rolling it into a bear call, but not until we get the Fed announcement. I'm leaving this alone until we get the Fed announcement tomorrow afternoon and see how the market reacts to it. Now, and that applies to both the SOS spread trades as well as the triple play trades. As far as the triple play trades go, we have Johnson & Johnson, but also UPS that we've adjusted it to a bull put spread, and it's also going the wrong way. But here's the difference. Once you're in a bull put spread and you're fairly close to the money, even if your short put is a little bit in the money, it's easy to roll out a week at a time and continue to get a break even or a credit. I would prefer a credit. I looked just a few minutes before we started this presentation. If we were just to take both legs of the UPS trade and roll them straight out 1 week, right now we would be sitting at about a 5-cent per share credit. That's not a lot, but it doesn't change anything with our max possible loss. It doesn't change anything really with the trade at all, except that we're 4 cents better off on what our credit is. I think that credit will increase to 10 or 15 cents in the next day or two, but you got to be careful. You don't want to wait too long to roll it out, because there's a chance that you have the stock put to you at $96 a share, and then you might be forced to sell at 95. It's trading right now at 95, but I actually think UPS is going to bounce back up before the week is over. I really do believe that. I may not wait past tomorrow to roll it out, just because if the option's in the money and you get within a few days of the expiration, it starts to become more likely that you have a short put to you. So I will not do it unless I can get a credit for it. I want a credit of at least 4 or 5 cents. I would prefer to get a credit of 10 or 12 cents a share, but use your best judgment. I can tell you unequivocally, unless tomorrow morning at the open, UPS is skyrocketing to the upside and going right up past 95, unless that's happening tomorrow at the open, I will not wait past the first half an hour to an hour of trading tomorrow to roll UPS out. If things move today such that there becomes a credit to roll it out, if we get in a spot where there is more than a 5 or 6 cent per share credit to roll it out today, I will do it today. So if you have the ability, I don't want anyone to have to sit in front of the markets all day long and watch every single little tick of the market. I don't want that. I don't want you to have to do that. But if you're in a position where you can keep an eye on it and you get to a spot where you could get, I would say, anything more than a 5 cent per share credit to roll it out 1 week, just go ahead and do it so that you make sure that you're less likely or not likely at all to have it put to you sometime during this week. And that's where we're at with UPS. I'm excited about our other 3 triple play trades that'll take place this week. They all have earnings, I believe, either today after the close of the market or tomorrow morning. So it'll be fun to see how that all plays out. I'm going to wrap up right there for the day and get this the recording posted online, and have a good rest of your day today. I'm traveling tonight around midnight my time until 5:30 in the morning East Coast time, but I will be online tomorrow morning when the markets are opening, so I have an idea of what to do with UPS. All right, everybody, have a great rest of your day. Thanks. Bye-bye.